here's the interesting thing. My bank was completely solvent. I didn't make any loans. I didn't have any debt. So every one of my bank's customers could have withdrawn his or her deposits when it was still open, and they would have all got their money because I didn't have to sell anything. I had all the money. I never loaned it out. I never took any risk. So the market would not have put me out of business. I would have stayed in business if it was just a free market. But here, all these other banks that did all the risky things that I was smart enough not to do, made all these bad loans, like locked in all their deposits for long term at low rates, right? They borrowed a bunch of money. They got all levered up. Those banks should all go out of business. They should fail in the market. But the same governments that shut my bank down, are going to bail those banks out, right? I get punished for doing everything right, and they're going to get rewarded for doing everything wrong. That is the opposite of a free market. If we had a free market, my bank would still be in business, and all these other banks would be failing. And maybe I could buy some of those banks and expand and run them honestly and right. But no, the bad actors are going to get rewarded. They're just going to get bailed out, right? This is the perverse way that the U.S. economy works. And nobody can call this capitalism. Everything that is about to happen, all the money that's going to be lost, all the inflation, all the poverty, right? Everything that's going to happen, don't blame any of it on capitalism, because none of it would have happened if we had capitalism.
Beware, because your money is going to get lost soon. What if the Fed takes all your money, even if you do the right thing and try to protect your money as well as possible? Remember one thing, the Fed wants banks and companies to survive more than you. That's the bitter truth, but you have to accept it. But the warning does not end here. You have to do something different this time than only withdrawing cash to protect yourself from the financial market crash. That's what Peter Schiff, the CEO and founder of the Euro-Pacific Asset Management, author and chief economist who predicted the financial crisis of 2008, said. Pay more attention, folks, because the Fed unknowingly prepares to hurt you like never before. And this will hurt your financial future and, sadly, of your children if you don't make a move now. Let's first listen to what Peter Schiff said.
Yeah, look, we had a problem not too long ago in the repurchase market. I remember that, and that was part of, I think, the initial Fed pivot. This is even before COVID happened. But yes, everywhere that you have a lot of leverage and you have a lot of debt, there is going to be a problem. There is a consequence to what the Fed did. As I said, we didn't get all this for nothing, right? All the banks that were making money on the spread when interest rates are low, now they're going to offset that with massive losses now that rates have moved up. What they had to do, they made a deal with the devil to make money in the past. And now the devil is here to collect. Now, of course, a lot of the executives, they don't care. They already got all their bonus money. And part of the reason that a lot of banks were willing to make these risky loans and take all this gamble like this, is because they thought the government would bail them out. The Fed's going to bail them out. Why? Well, that was the lesson of 2008. Doesn't matter if there's a bubble, just gamble, take a lot of risks, live for today, don't worry about tomorrow, because the government's going to bail you out. That is the moral hazard. That was one of many reasons that I was opposed to the bank bailouts in 2008, 2009. Because it created the foundation for even bigger bailouts in the future, which is what we're going to experience. Ironically, and I see a lot of people want to, poke fun at me because they say, oh, Peter Schiff, look, your bank failed, so you ought to know a lot about failed banks. My bank didn't fail. The government put it out of business, but it didn't fail. And here's the interesting thing. My bank was completely solvent. I didn't make any loans. I didn't have any debt. So every one of my bank's customers could have withdrawn his or her deposits when it was still open, and they would have all got their money because I didn't have to sell anything. I had all the money. I never loaned it out. I never took any risk. So the market would not have put me out of business. I would have stayed in business if it was just a free market. But here, all these other banks that did all the risky things that I was smart enough not to do, made all these bad loans, like locked in all their deposits for long term at low rates, right? They borrowed a bunch of money. They got all levered up. Those banks should all go out of business. They should fail in the market. But the same governments that shut my bank down, are going to bail those banks out, right? I get punished for doing everything right, and they're going to get rewarded for doing everything wrong. That is the opposite of a free market. If we had a free market, my bank would still be in business and all these other banks would be failing. And maybe I could buy some of those banks and expand and run them honestly and right. But no, the bad actors are going to get rewarded. They're just going to get bailed out, right? This is the perverse way that the U.S. economy works. And nobody can call this capitalism. Everything that is about to happen, all the money that's going to be lost, all the inflation, all the poverty, right? Everything that's going to happen, don't blame any of it on capitalism, because none of it would have happened if we had capitalism in America. It's all because of the socialism that has crept into our economy based on our democratic system. We voted for it all. That is the fatal flaw of democracy. It destroys republics. It turns them into democracies, and then they bankrupt themselves through deficits.
To understand what Peter Schiff said, we have to go where it all started. In the past and even now, U.S. private banks have been more spoiled brats. Since the interest rates were equal to zero in the past, these banks offered loans to customers. Hence, this increased the total debt all the private banks in the U.S. had due upon them. But things didn't go as planned. Those banks had gotten money from the Federal. But where does the Fed get it from? Well, you guessed it. It was made from the air, or, simply said, the Fed printed more money. This brought an inflation which the innocent Americans accepted. They didn't know that this was not due to their actions, rather, due to the Fed doing some shady business. The Fed thought it would be good to offer money to banks and give grease to the jammed wheels of the economy. However, the companies coming to those banks or loans didn't perform well. What does that mean? Well, those loans were not paid back until a level that the banks in question were near crashing. The Fed could not see that. Hence, you guessed it, more money was issued to these banks. Peter Schiff is talking about the financial crisis of 2008 when companies crashed, but they still got bailouts. Here's a little reminder to like the video if you are loving it. And if you don't want to miss videos about the evolving economics and the financial order, subscribe to our channel. Let's continue now. Since 2008, every company and bank knows that even if they gamble, take high leverage and lose everything, the Fed will come to support them. But at what cost? Well, just know that whenever the Fed offers money to these failed banks and companies, it will bring in more inflation. That money is printed, which devalues the existing money. That's the reason why you are seeing such high inflation. You didn't do wrong. Those banks and companies were gambling, but the cost was put on you, the Americans. Peter Schiff said that even if some banks do the right thing and don't offer non-performing loans, they still have to pay the cost. Imagine that you have saved $100,000. They are in your bank, giving you interest. However, some really famous banks got themselves in the middle of the crisis. They had offered heavy loans, which they could not get back. The Fed decides to issue them money, let's say, $20 billion. Now, even if you didn't do anything, your $100,000 value will lessen. That's because extra money was printed. That's what unfair the Fed does with the Americans. Peter Schiff said it right that it's not capitalism which is running America, it's socialism that has reached the depths of the country. Hence, the Fed should decide that it won't offer any money to the failing banks and companies this time. Not anymore. They should be allowed to fail because capitalism says that the failed entities should fail so they don't waste more resources. So, what should be done now? Well, Peter Schiff has got something to tell.
I'm not telling people to start a run on a bank. I am just contemplating what people might do when they think about what just happened. You had a major bank that was, voted best bank in the country. Pretty much overnight, it's insolvent. No advance warning. Nobody knew. And now a lot of deposits are gone if you had more than $250,000. Obviously, if you had $250,000, for now you're covered, so you're not worried. But if you had $1 million at that bank, $2 million, who knows what you're going to get back right now. So I'm just saying that people are going to be worried and they may run to the bank. But also, people are going to want to get higher yields on their deposits than what these banks can actually pay because they put themselves in a box where they can't afford to compete with the rates that are being paid now by U.S. Treasuries, which are supposedly risk-free. So, they're going to lose that competitive battle, and the Fed has got to keep raising rates, and they're going to be there for a long time. So ultimately, these banks have got to fail, and people anticipate that. They want to get their money. I mean, that's why the banking system is so inherently unstable now, thanks to the FDIC. Before the Great Depression, there was no bank insurance. No banks were government insured, and therefore they were a lot more solvent. And so even though we had a depression, only about 2% of the total bank deposits ended up getting lost. It's a very small amount. But now, far more than that. In fact, inflation is going to wipe out a lot more than 2% of the value of bank deposits this year, far more than was lost during the Depression. But the banking system as a whole is much less solvent than it was in the 30s because of the moral hazard created by government insurance. Because of all these insured deposits, they're all risky. And because the depositors don't give a damn about how risky the banks are, well, they put their money in risky banks. But now that some of these banks are failing, they're going to...
Peter Schiff isn't necessarily saying you should run away from banks. Perhaps they are the only thing you have got. But that does not mean you are out of options. Peter Schiff said that even if you have a bank account in the best bank in the U.S., there is a possibility that it can go bankrupt. But why? Well, you should know that the bigger the bank, the bigger the withstanding debts it is in. In other words, if people are saying a certain bank is good, it means that it has given more loans than it can afford. And this comes with risks, as you know. If those loans are not paid back, that bank will go bankrupt. But here is what should concern you. If you had your $100,000 deposited in that bank, they would vanish. Nobody knows what will happen and when would you get your money back. Not only that, but banks do not offer high yields as is the demand today. They are more like vintage institutions that are destined to go bankrupt. The reason for that is they do not work as they should. Their working model is flawed, which keeps on bankrupting them. Peter Schiff's point is simple. Now, most banks are insured by the government. In other words, the Fed won't let them go bankrupt. And this will come at the cost of you devaluing your money. Without caring for your and the Americans, the Fed has to and will offer more to these failed banks. Does that mean the USD is no longer an option? Here's what Peter Schiff said about that.
The threat is from within. The threat is that the dollar is going to implode on its own based on the enormity of the debt and the realization that it's unpayable. And when our creditors realize we're just going to inflate instead of pay, then it collapses. And it's not because of the strength of the euro or the Chinese RMB or the yen, but of the inherent weakness of the dollar. And the alternative is none of those fiat currencies. It is gold. Gold is the only real money that is a viable alternative to the dollar or any fiat currency. And it ain't Bitcoin.
Peter Schiff said that the USD would keep on getting weaker because everyone knows about the structural problem, the ever-growing increasing debt. Everyone knows that the Fed will print as many dollars as it wants, weakening the USD further. And this will bring a crisis for the US on an international level. But if you want to know what you should do, Peter Schiff said clearly that the answer is not any fiat currency, it's gold. What do you think? Will the Fed finally decide not to help the failed banks? Or should you look for another asset because the Fed does not care? Comment your opinions in the comment section right below. Do you want to watch more videos like this one? If yes, please like and share the video and subscribe to our channel for more videos on the latest economics and financial news. Until the next video, stay tuned.